Thank you, Mr. Chairman. I just want to point out in regard to the impact of Dodd-Frank on small banks that Harvard found that small banks lost 6% of their share of industry assets during the financial crisis, but since Dodd-Frank, they've lost 12%. So I do think that validates that we're losing community banks as a result of Dodd-Frank. I think Frank Keating, the president of the American Bank Association, said we're losing one bank a day, 7 days a week. So it is a problem, and particularly in context to the answer you gave Mr. Carter about how many new banks the FDIC approved last year. Did you say one?
Yes, sir.
That is problematic for a lot of us who represent rural counties, and I think practically all of us in Congress have some rural counties. I grew up in a rural community, and our community bank was extremely important to us. Let me ask you this: why have you been able to approve? Why have you been unable to approve the creation of more community banks? What's the holdup?
This has been a subject of discussion during the course of the hearing, but at least it's, as far as we can tell, we've had a extraordinary, really unprecedented economic environment, really in the aftermath of the financial crisis and recession. It's been the longest prolonged period of near zero interest rates really in our country's history. And community banks make money by making loans and charging interest. And so when you have a very low or zero interest rate environment, it becomes a significant obstacle to establishing a new institution. We think that's the core issue. If the economy can continue to progress and we see some rise in interest rates, we're expecting to see some increased activity. What is under our control is the process and procedures for submitting an application and working through an application process, and that may be the area where we can make a contribution to facilitating the institution.
I don't disagree that the economic conditions are part of the problem, but I think one of the reasons our economy, for instance, our economy has grown 1.55% over the last 8 years. The 70-year average is 3%. You want to talk about something that's unprecedented. And I think a large part of that is due to the regulatory environment. We've seen record numbers of proposed rules. I think 2011 was somewhere north of 84,000. That record was broken in 2015. I think we'll probably break that record again this year. I think we're on pace for that maybe. And as has been pointed out already, I think the biggest uptick in hiring in banks has been people to comply with regulations. And one of the things that we've got to do, and this, I think, in trying to help our banks, but also to help the economy, is untangle them from all these regulations. Let me ask you this. If the FDIC is open to accepting new bank applications, where in the field is the breakdown occurring? And are your field examiners or other senior staff meeting with potential applicants expressing other concerns?
No, look, I think our people are ready and available, and we certainly work closely with the groups that have an interest. I can only say that I think the economic environment remains a challenging one. That's why we're actually seeing, at least thus far, only a handful of applications.
Well, one of the things that interests me in this is the FDIC routinely uses financial institutional letters to announce changes for de novo banks. Stakeholders are unable to comment on these. And why does FDIC choose to utilize financial institutional letter and then not give stakeholders the opportunity to comment? You know, that might be a way to improve the application process.
Yeah, you know, we have just put out our application, existing application for public comment to take comments from industry and participants on how we can improve it and simplify it. So we do seek public comment. Financial institution letters are a means we use to communicate with the industry and to provide guidance to them.
Don't you think more participation by the folks who are interested in starting a bank would be helpful? Mr. Browning, if I may, I'd like to ask you a question. Did you participate in any meetings prior to your filing with the FDIC, and Would a meeting like that have been helpful?
Well, thank you, Congressman. We engaged in a long series of conversations before our pre-filing meeting. We held that pre-filing meeting jointly with San Francisco FDIC as well as Washington, D.C. FDIC. From that pre-filing meeting is when things got a little curious for us.
Did you receive any communications from the FDIC that they, on why they would not accept your application?
So we never actually formally filed an application because we could never gain clarity on what was actually required to submit an application that would be deemed complete. We held a series of conversations for many, many months, but could never gain that clarity.
So you had trouble getting any clear communications that would have helped you in your process?
Yes, Congressman, and the statutory requirements that have been longstanding are themselves clear and I believe adequate. What is different today, and as Mr. Williams explained, the pendulum has swung, is the interpretation and application of those requirements and the authenticity that they're applied within certain segments of the FDIC.
If I may, Mr. Chairman, just one more question. It's my understanding that the FDIC does not track pre-file meetings because these are optional. Is that correct?
Yeah, I believe
And if it is, why aren't you documenting this?
would be, I don't think we have a problem doing them. They're voluntary. Some applicants utilize them. We encourage them. But since it's an informal pre-filing process, it's not something we would track as part of the application process. We certainly can and can do that. And as I indicated at the outset, we're undertaking a review of our procedures relating to deposit insurance applications, so that's certainly something we can consider.
I hope you will. I hope you will implement that. Thank you, Mr. Chairman. I yield back.
Thank the gentleman. Now